we're not nearly as bearish as that. China has tremendous economic issues that it's facing, but they're not really facing economic issues when it comes to the external sector. The issues are kind of domestic confidence and consumption. So weakening, CNH and CNY isn't going to fix the fundamental issues that China is facing. That said, we saw what happened last time, that the exchange rate can be a shock absorber, but we think that the Chinese authorities will be cautious and prudent about letting the exchange rate depreciate until they know exactly, what the outcome is, what the threat is from U.S. policy, rather than, speculate against themselves well in advance of anything concrete being proposed.
Yeah, and arguably they've got some domestic wood to chop over the next couple of months with the Economic Work Conference and also the NPC, so we're watching that. Broadening it out to Asia, we had the folks over at ANZ, or at least I was listening to what they were saying about FX in this region, talking about how they're expecting a fifth year in a row of depreciation in Asian currencies versus the dollar because of Trump's policies, but also expectations of perhaps a slower pace of rate cuts.
Well, I'll agree with half of that. Look, I think actually there's a chance that the market's a little bit over its skis with respect to dollar strength. And the reason is this, that we don't have any of the policies in place yet. None of the stimulus is actually there. What we have is U.S. interest rates way above where they were 2 months ago, the dollar way stronger than it was 2 months ago. That's actually a tightening of monetary policy. And I think that, in the incoming U.S. economic data, we might find that we hit an air pocket there with respect to U.S. growth. Doesn't mean that the dollar is going to collapse. The market is clearly long dollars. They've shifted towards relatively gentle Fed cuts. If we start getting bad numbers in Q1, I think we could get and that's what we're expecting, that we'll get a little bit of a dollar correction, with the dollar strength actually showing up in the second half of next year, when the policies are actually put in place and when we begin to see the impact of the stimulus, rather than at the beginning of the year, when paradoxically we don't have stimulus, but we do have effective contraction from the exchange rate and interest rates.
Before we let you go, Stephen, just your thoughts on Trump's policy, or I should say commentary, demanding the BRICS commit to not creating a new currency or support another currency, or face 100% tariffs.
Well, I think that, he's conflating and he has multiple objectives. And I think that when it comes to saying, look, do we want exports to increase? What pops into his head is saying weaker dollar will help. When there's a question of, do we want the prestige of the U.S. and the dominance of the dollar kind of put at risk, he takes the opposite viewpoint. At the end of the day, if his policies are successful, the dollar is likely to be stronger, because if his policies are successful, we're going to see capital inflows into the U.S. And it's going to be very hard to fight those. He'll get what he wants in terms of a weaker dollar, but it's probably going to be because if his policies turned out to be unsuccessful, and I'm not sure that that's what he wants at the end of the day. And he certainly doesn't want, to see other countries selling the dollar and sort of looking for alternatives to the dollar in international finance.